Happy Saturday, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. As always, we've got a lot to get into, and if you're new around here, do check out that subscribe button because we drop an update just like this one every single day around 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening in the crypto space, but also the broader markets. And to kick things off on the broader markets, it's remarkable just how well the S&P 500 has recovered. Now, the stock market generally has recovered from in the S&P's case, a 21% pullback. It is now just shy of 3%, around about 2.5% away from going on to making a new all-time high. And that's at a time where there's a lot of uncertainty that is still in the markets. We did say that actually retail and generally people had got things wrong with this pullback. Certainly sentiment being lower than the sort of crash that was caused by lockdowns, the 2008 financial crisis, or the dot-com crash was, I believe, a buying opportunity. I think when everyone's bearish, you often want to do the opposite. It's rare that everybody is right. Of course, it can be the case, but it is rare. And obviously, since tariffs, everything's been announced, actually, the S&P 500 has recovered quite remarkably. And I think that's very bullish and telling of what's to come. We're about to go back into price discovery for the S&P 500. And even yesterday, with everything going on between Trump and Elon, you know, my personal opinion is it's far more staged than anything because they were both getting criticism due to their relationship. And it could ultimately be a distraction in regards to the financial system that has crypto at the heart of it. And that's where, or one of the real opportunities with this industry, it could just be a big distraction from everything going on or something more broadly going on. So I want to highlight this because the S&P 500 has recovered remarkably. The likes of the European markets have done even better. You know, you look at the lens of the DAX, it's gone on and put in new all-time highs in price discovery. And I think that's been spurred along by where interest rates are and the cuts that we've seen out of the ECB. And that's a good place to start because there are rumors just in President Trump to announce next Fed chair very soon. I don't think this is as bullish as people think. Certainly rate cuts, you know, through the lens of liquidity ultimately spur on money creation. Money creation goes hand in hand with asset prices. We've done lots of work on this. It's why I initially got into Bitcoin. And we've also spoke about the kind of fragile nature of where the financial system is right now in regards to the velocity with the debt markets and actually how we need the likes of stablecoins. We'll talk about stablecoins in a second because monthly on-chain transaction volumes for USDT is at an all-time high of $1 trillion in a month. I mean, that's insanely impressive, and I believe the evolution of money is stablecoins, crypto-enabled money. So that's trillions of dollars to come on chain. Every single financial instrument, I believe, is going to be run on a blockchain. And the reason being is because it takes them global, makes them more accessible, democratizes markets, and ultimately makes them more efficient and cuts out the middlemen in many cases, just like kind of Bitcoin did with this idea of an alternative money. You know, you don't need your banks to have that. You just need participants in the network, if you will. So Trump presses Fed, Powell, to cut interest rates by a full point despite strong jobs report. Jobs report was certainly jobs reports coming down. I mean, on the back end of the sort of lockdowns, it's very natural to expect that you have kind of a bottleneck and a really, really strong jobs reports. Non-farm payroll, of course, was yesterday. We watched that because it's very telling in regards to economic data, and certainly the Fed look at that. But there has been a bit of a slowdown. Despite that, it did beat expectations, I think by about 10,000 jobs. The TDLR on this is President Donald Trump urges Federal Reserve Chairman Powell to slash interest rates by a full %. A new jobs report from the Bureau of Labor Statistics shows U.S. hiring rose more than predicted in May. Trump pointed to repeated interest rate cuts in Europe. The Fed lowered rates by 1 full point in total during President Biden's final year in office and last made a single cut on that amount during the start of the March 2020 whole thing. And this, of course, was his Truth Social tweet. It says, "Too late at the Fed is a disaster. Europe has 10 rate cuts. We have none despite him, our country is doing great. Go for a full point rocket fuel. And I do think it is. I think there's a notion that rate cuts and a kind of pivot with rate cuts is very bearish for the markets. Well, you've got to understand the context. So if they're cutting rates because 2008, March 2020, yes, you can understand that rate cuts would be a bearish thing because of the broader context. And context is always key. And we often, as human beings, don't bother looking at the context of a situation. I was going to go somewhere very interesting that with a political philosopher who gets a lot of, kind of hate. But if you understand the context of when he wrote those theories, it kind of makes sense. But context is always key. If rate cuts are being done under the context, how many times can I say context once more, of a crashing economy due to something like 2008's subprime mortgage issue, you can understand rate cuts being bearish. But actually, if you look at a history of rate cuts, typically rate cuts have been more bullish than bearish. And certainly and why I started on the S&P 500, the S&P 500, where it's at, about to break into price cover, I think there's generally a good macroeconomic environment, despite all the uncertainty. There's always going to be uncertainty in markets. You have to look at the validity of it. And we've said that retail, the markets got the pricing of the S&P wrong. And this is pain. This is real pain. How many people would have panic sold here and now gone out or shorted and now been trapped on the other side, or just sold, which can be even more gut-wrenching for some. So on the back end of all of this, and I'll offer my opinion on this. So even though we said we're more bullish on Trump's presidency than not, Nirvana's not for this world and nobody's perfect. Just in, President Trump to announce next Fed chair very soon. I think they should try at least and keep this illusion of the Fed being a separate entity from the government going, because it's not. There's some things that are happening that I just don't think are a good look. And when you have a Fed that's controlled entirely by the government, which is predominantly the case, and they should be separate, it's a very interesting world. It's kind of more socialist than it is perhaps anything, which is interesting in itself. And I do think it's interesting that under Biden he was willing to cut, not under Trump, despite inflation being lower than it was under Biden, so on and so forth. There could be a political aim here. And I think, President Trump likely is going to look to get rid of Jerome Powell and put somebody in that might be a little bit more forthcoming with monetary policy. Jerome Powell has, I believe, introduced actually a lot of uncertainty into the markets. Not that it's his job necessarily to support the markets, but he's not been very forthcoming with anything. And I think he perhaps could have been more so. And all of this is relevant because the cryptocurrency space really, probably more so than any other asset, needs that kind of wind in its sails in regards to a good macro environment. We think it's got it. We have significantly higher targets for Bitcoin. I think the macro environment is going to be a good one. Ultimately, our plan remains the same, despite frustration in the cryptocurrency space. We fundamentally know what this technology is going to do, and we technically have the merit to support that. And I believe we're investing in the right cryptocurrencies to really capitalize and benefit off this. And I understand the frustration. I understand the kind of people don't want to hurry up and wait kind of environment, but things are playing out as we want them to. A little bit slower for the altcoins than we'd have perhaps expected, but generally things moving in the right direction. We've got some insane news out of the UK. Now, this is something I'm personally happy to see as somebody that will typically take advantage of his stocks and shares ISA allowance. In the UK, we have a stocks and shares ISA allowance. It's about £20,000. I don't always fulfill that, of course. But you can invest £20,000 a year into a stocks and shares ISA, and that, or the money that you make on that, is essentially capital gains free. Always, before you, don't just take my word for this, go and do your own due diligence. But today, the UK government, because we've got the best government in the world, really, haven't we? My heart bleeds for my country and my people. It genuinely is upsetting, and I think I'm not just the only Brit that feels this way. This is good news. It's very specific to the cryptocurrency space. It doesn't take away from the demolition of the United Kingdom. You know, but this is interesting. Certainly for somebody that might want to put this into their stocks and shares ISA. What we have here is FCA, which is our essentially SEC, to lift ban on crypto ETNs, which essentially is ETFs. You know, it's like ETPs. They're a debt-based instrument, but they ultimately are the same thing in a roundabout way. And even the ETFs in America are very similar. To support UK growth and competitiveness, the Financial Conduct Authority's FCA is proposing to lift ban on offering crypto exchange traded notes, CETNs, to retail investors. Similar products are already available in other countries. It would mean CETNs could be sold to individual consumers rather than just professional investors. In the UK, if you're traded on an FCA approved investment exchange, a recognised investment exchange, or RIE, financial promotions rules would apply, so consumers get information on risks, so on and so forth. It goes on to say, this consultation demonstrates our commitment to supporting the growth and competitiveness of UK crypto industries. I mean, they're the kind of last ones on it. We want to rebalance our approach to risk, and lifting the ban would allow people to make the choice on whether such a high-risk investment is right for them. They could lose all their money. They could. You know, you can lose all your money in crypto. This is from Duncan. We interviewed Duncan. He's the president of 21 Shares, also on the board of Adira, previously at Aberdeen. This is a big deal. The UK FCA is taking a major step towards allowing retail investors access to crypto ETPs. This is huge. Graham from Archak's also tweeting about this, another great guy to go and certainly follow and check out. And this potentially would allow somebody like me to be able to invest in crypto when they're offered and facilitated with cheaper fees than buying on exchanges. So the self-custody element of things, people are saying, oh, well, you know, it's not buying crypto and all the self-custody and libertarian ideals and principles aren't there because you're buying for an institution, it takes away from that. Okay, well, you can go down that route, of course. If you're buying crypto to make money on it and as an investment, it's cheaper to buy these ETNs and ETPs in some cases in regards to the fees and the spreads than it is on an exchange. You actually can get a better deal. You can get your crypto cheaper. You don't have to worry about custodying it. You can put it into your stocks. There are benefits that we'll talk about more broadly when all this is released, but it's not there yet. But huge news, great news for the country and the people of Britain. Monthly on-chain transfer volume for USDT is now an all-time high of 1 trillion. It's only going to continue to grow and accelerate. And I actually think why you're seeing stocks be offered by... If I had a stock and I was interested in the price, I would want it to go 24/7 and perhaps be getting in touch with Kraken and saying, look, let's do something here, because they can gain access to that stablecoin liquidity. And this is only going to continue to grow. I truly believe, we looked at Uber's CEO talking about stablecoins and their interaction with it to save fees. The evolution of money, in my opinion, we're going to release an interview with someone that works for the Dutch Central Bank next week on this subject entirely. And we really simplify why would you use stablecoins over the traditional financial rails, and it makes all the sense in the world. We looked at the Uber CEO saying that he's doing that to cut costs. It's my opinion that stablecoins are the evolution of money. There'll be CBDCs in Europe, different approach. Deutsche Bank is exploring stablecoins and tokenized deposits, including issuing their own token or joining an industry initiative. You know, the dots are always being connected here on this channel. A hell of a lot going on. We're very bullish on, despite all the uncertainty, the markets. Certainly insanely bullish on the cryptocurrency space. I get confirmation every single day. This asset class hasn't even been allowed to become one. You know, just the other day we saw that they're allowing in 401ks crypto now. The barriers, the walls are being broken down. I think you've got a good economic picture despite all the uncertainty. That's my opinion. I think the cryptocurrency space finds itself perfectly positioned to enable the revolution of markets, of systems more broadly. And it's just a very exciting time to be in the cryptocurrency space. It doesn't always feel like that. That's it from me, guys. I'm going to love and leave you to your Saturdays. See you all in the next one.